G'day everyone, welcome back to Pete's Investing, July 7, 2023, the Aussie New Zealand currency update. On our weekly we're in a bullish momentum, although you can see there it's weakening and we're showing a bearish signal on our daily. We've had a couple of divergences that have played out, and we've actually got one that's working out at the moment, so hanging there. We could be a small entry to be taken on the hourly time frame. On the weekly, first off, the triple moving average of the price chart, the CCI moving averages are all starting to turn down, but our oscillator here is still showing a bullish momentum, so we may see that break to the downside as well in the coming days or possibly next week or so. On the daily, it's already broken to the downside, you can see there, and it almost hit this resistance up here, and it came retraced back to the downside. But you notice the Fibonacci range between that high and that bottom, it's currently sitting at the 61% area, which is a really key area of Fibonacci. So there's a small bull candle at the moment, but it may potentially, if it punches through there, we're going to see further declines in line with this bearish signal down here. So we'll see where that goes, but that's a key area to look out for at the moment. We could probably put a minus support level right on that level there. Now on the hourly, you can see back here we did have a few divergence which worked out quite nicely. There was a bearish divergence here versus a bullish on the price. It broke down and hit our target initially. They just poked through with a wick there, retraced, did almost a double top back there, and then it broke back down again. There's a bullish divergence here, bearish divergence, bounced up, hit our target area, and that was before our last video. That's where we projected that one. So that's hit it, had you entered that one. And more recently, we've got now this new bullish divergence on the CCI versus a bearish on the price. Again, this is that the minor support area I just drew. And we may see this bounce to the upside. So the way you would plan for this as an entry, you would draw in that divergence range, you would draw a channel. So when the price breaks above that channel, which it did there in the last couple of hours, that's your entry. So it's primed for entry right now. And you would place a Fibonacci range between that low to that more recent high, and our initial target area would be probably somewhere in that first Fibonacci range, the 23% to the 38% range. So that's our initial target area. Of course, if you want to be a bit more conservative, you can bring the target closer. If you're a bit nervous, or if you're really risk averse, you can not risk averse, you can go higher as well. A lot of these do go higher, as you can see here. This one came in, bounced in that range, and then bounced back down. This one touched it, actually kissed it there, bounced up, scared you out of it. Probably if you're using stop loss, you would have stopped you out. I don't, and that's why I don't use stop losses, because charts do all sort of tricky things, and it retraced back to the downside. And that's where we are on the hourly. So at the moment, I would avoid trading on the trend primarily, because at the moment it's giving us a bullish on the weekly and a bearish on the daily. But at the moment you could probably take a small little retracement to the upside as per that divergence, and at the very least, before possibly taking any further downside if this started turning to the down, showing a bearish signal on the hourly. So anyway, to understand how to trade this and other trading strategies, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.